If you run a chiropractic practice in Australia, the financial profile of your business is actually stronger than many practitioners realize when it comes to accessing finance. Your revenue is consistent, your patient relationships are long term, and the operational model of a chiropractic practice is well understood by lenders who work in the healthcare space. The challenge is less about whether you can access finance and more about understanding which type of finance suits each situation you face. Here is what is available, how it works, and what you can realistically borrow. Chiropractic practices benefit from a lending environment that recognizes the stability of allied health revenue. Fee-for-service billing with private health fund rebates, predictable appointment volumes, and high patient retention make chiropractors an attractive lending proposition for healthcare specialist lenders. Generalist bank lenders are often less responsive, but the non-bank and specialist healthcare lending market is active and competitive. Equipment finance is the right structure for purchasing adjusting tables, decompression equipment, digital x-ray systems, muscle stimulation devices, and other clinical tools. The equipment itself is the security, keeping your property free. Rates are lower than unsecured loans, and the tax treatment is often more favorable. For practices upgrading to digital imaging or adding new treatment equipment finance handles these purchases cleanly without consuming working capital. Unsecured business loans provide fast access to funds for fit-out improvements, marketing investment, hiring associate practitioners, or bridging the gap between opening a new location and building a patient base. You can borrow between $10,000 and $500,000 based on your practice revenue and bank statements, with approval in 24 to 48 hours. A business line of credit works well for practices managing seasonal patient volume fluctuations or cash flow gaps between private health fund reimbursements and outgoing costs. You draw what you need, repay as revenue builds, and only pay interest on what you are using. For practice acquisitions, major fit-outs, or opening additional locations, secure business loans using property as collateral give you access to larger facilities at lower interest rates. Chiropractic practice acquisitions are well understood by healthcare specialist lenders who can structure finance appropriately for the revenue profile of the practice being acquired. How much you can borrow depends on your practice revenue, how long you've been operating, and the specific purpose of the finance. Established practices with strong patient volumes and clean financials access meaningfully better terms than newer practices, though lenders do take into account the predictability of allied health revenue when assessing newer businesses. Applications take under 20 minutes online for most specialist healthcare and non-bank lenders. A commercial finance broker with healthcare experience can identify the right lenders for your practice before you apply. Brokers are paid by the lender on settlement and do not charge you directly. Use the free business loan finder at Reliable Business Tools to find which loan type suits your chiropractic practice. 6 questions, a clear recommendation, no credit check, and no obligation.